let's take a look at the stock market on the 60-minute chart for the last week, the gray area being the area of overnight trading, and the white area is the pit trading, as old pit traders like me would call it. So what do we see here? Well, not much on Monday and Tuesday. The market tried to rally on Monday without any real news, but China came out and they blocked Micron chips from coming into their country as a trade war response, and you could see that knocked the market down in here. So net, the market was a little bit down for the first 2 days of the week. Not a lot really went on. Here was the holiday, 4th of July, and you could see they still traded the futures, of course, because, well, it was our holiday, not the whole world's holiday, as we got independence from Great Britain. And now, when you look here at Thursday and Friday, the news really did pick up. There was talk of a deal here with Eurozone for the car tariffs that really has not come to pass yet. And China warned of instant retaliation if the U.S. Opens fire on the world with its tariffs, which they have done. Then what we saw here during the day on Thursday, well, the FOMC minutes came out. They rallied into the FOMC minutes, bounced around a little bit, and then closed strong. FOMC said interest rates to continue moving upward into next year. That certainly will invert the yield curve if they do that, and I think that they're not going to do that. So that's what they say. I think they're going to get nervous about it. Their concerns are the yield curve that they said, and the trade war, and a potential recession if that were to come, and inflation, which I say LOL to that because, well, there's no inflation, and they're concerned with the yield curve. Why are they talking interest rates to be up for the next year and a half or so? So I don't know, talking through both sides of their mouth. The FOMC really, to me, is confusing, and I would call them worthless. Of course, I'm a free market guy, and they are far from a free market part of our government. Yeah, they say they're independent, but, you know, they really don't really act that way. It's the official start of the trade war here that you can see, and that happened as the market sold off here overnight, but then news came out of the payrolls. They were up 213,000 versus 195 expected. The U3 rate pops to 4% on an participation rate increase. So there's more people that came back to the workforce. So that way the numbers work is it pushes up the unemployment rate to 4%. Wages softened a bit, and those have been disappointing. And you could see what happened to the stock market as it turned up on that news and never looked back here on Friday, as every person who's short, including me, watch this market climb on this news of the trade war and seemingly not even caring. Now it's stalled the last few hours, and we only have an hour and a half left to the day here. I'm going to show you in the short-term view that I think that we're going to get some downticks in the coming week. But, you know, again, like I said in here, it looks like this window for the market correction, based on my work, is closing with just a short number of days, couple weeks, still of a risk period. So for the S&P 500 last week, we said that we thought this would be a down week. We thought that it would test the 2670 support area, and we keep raising those supports up because of the way the market's been acting, and now we're going to raise it up again. The expectation was that it would be lower into after the holiday, that would be able to hold up before the holiday, which it typically does, and then selling would come in after the holiday. Well, you can see that was completely wrong. What happened essentially was that everybody's attitude was similar, and there were a lot of shorts out there that thinking the trade war was going to happen because Donald Trump's a hardliner, and that did happen, and everybody was leaning and got caught leaning, and then the market rallied. And my sense for the stock market this week is that it's likely to begin the test of the recent lows, but the recent lows are higher than what our target was, and that is likely to give us only some modest decline versus major decline that I was expecting. Now, for our members, you're going to see charts here that are different than the ones that I sent you just a day and a half ago. And the reason for that is because when we do cycle analysis, we look at the shape of movement to help us understand the shifting energies that are in the markets. And the shape of the movement today with the rally became very clear. So what happened was that the broad market started to follow the pattern that the Dow had been tracing out, which is not usually the leader, but now we have that happening. And now you could see that there's a better alignment. There were things that were really off, where the S&P pattern was off from the Dow pattern, which was off from the NASDAQ and the Russell, and now they're back to a good alignment, which is, makes me happy in one sense and unhappy in another because of that big rally day, which gives me clarity and gives me a little less money. So what I see in here now, and you can see this 14-day pattern here, 14-day pattern in here, we got a lengthening in here which brought it to where that Dow low was. You can see right here, which was a 22 days. So we essentially shifted out this way a little bit, and that now has us in a better alignment. What does that all mean? If we can get through the gibberish that I just gave you, is that we're this cycle here that we see, when that bottomed right over here, right at the top of the support zone, it was a much stronger case than I had given it credit for. And now it's gotten through the 61.8 and is up nearing that 78.6%. So that is around the 2770 number right over here, 2772 we'll call it. That looks to us like the area it would roll over and be done, and then have a test of the low. What's happened is that the intermediate patterns, which I don't show on this show, only for our members, we had been projecting a bottom in mid to late July. Now, this bottom on the weekly pattern looks like it's declared itself as the ultimate low. That's going to mean that this area here around 2700 is a worst case if the market is going to test that low in this pattern right over here, these coming down right here. That would bring you a failure right in here, 2770, 2775, right in that area. And then after that, test the low, and then get into this area here, which is what I talked about, a better summertime, where we have a much better chance of moving up. And this is where I think the financials are going to really catch fire and have some very good rebounds. I think the financials are the next upside leaders in the market. So we're going to look for this next week for a little bit higher prices, and then to fail, give ground around that 78.6%. If it were to continue in here, and if it were to move through that level and close significantly above it, testing this high, well, then this scenario is gone. And what it says is that the weekly cycle low that occurred right over here is dominating, and that then you'd get a pattern that was more like this, and then that summer rally moving up would be happening right over there. So this is not, they might go up or they might go down. This is it going to be a pattern that's like this that's bullish, or a pattern that's like this that's bullish? Yes. What I'm saying is that the intermediate patterns are giving signs they're turning bullish, with only a week or week and a half, we'll call it a week and a half period, where this window of downside risk still exists. And there still is time for this to fall over this next week and a half. But outside of that, I think the time period ends, and then we get into a better period. And again, I think that is led by the financial stocks. So we're looking for a rally that early part of the week maybe that just doesn't hold, and then get into one more period of market decline in here before the better period that we're looking for. I'm going to the city and I'm going to do a city show. And I know all my fans